The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Well, it's actually Chuck, Paul Lane, and Tucker with you today in what is gearing up to be maybe a nice little finish to the week with markets up in early trading. We did get a little bit of economic data today. The PCE, Personal Consumption Expenditure Price Index, also known as, quote, the Fed's preferred measure of inflation, is how it's always referred to oh so seriously when talking about it. That was released at 8:30 this morning Eastern Time, and we saw the Core PCE price number come in at 0.3% month over month, in line with expectations. The headline, including, food and fuel and those pesky little things that you have to buy, occasionally, that came in at 0.1% month over month for December, also in line with expectations. For year-over-year numbers, this took the PCE price index from 5.5 down to 5% for the last year, and core PCE down from 4.7 to 4.4%. Your thoughts, Paul?
Good report. Just exactly what was forecasted here. So I don't think it's a tremendous shock and really changes course when you look at the Fed. They're going to be meeting on the 1st in terms of what the next hike looks like. It seems like, Chuck, after this report, all systems go for a 25 basis point hike. In terms of all of the other data in this report, it seems like, solid report, just right in line with expectations.
Yeah, the expectations, 98.1% chance right now of a 25 basis point hike next Wednesday. That would take the Fed funds rate, that's the short-term lending rate, up to 450 to 475 basis points, so 4.5 to 4.75%. This would not have any impact on mortgages, which are based more on long-term rates, and so mortgage rates for the last 2 months have been coming down despite the Fed hiking, because the Fed does not directly control those long-term rates. But this would be something where, depending on, the types of savings accounts that you have, potentially you could earn more if banks decide to pass that through. A lot of the big ones are not doing so right now. Likewise, if you have credit card debt that is outstanding, that debt would likely see a higher interest rate as well, unfortunately. But those are the two most direct areas where you see an impact. Some adjustable rate mortgages may be tied to this. In some situations, home equity lines of credit may be tied to this. Are there any variable auto loans? I don't know that I've ever seen one.
Not that I'm aware of. They're usually so...
They're so short in term.
Right.
That,
Yeah, it's hard to... you don't hear much more than a 5 to 6 year auto loan, so having an adjustable wouldn't make too much sense. I'm trying to think if there's any other products out there. You hit on the credit card debt, hit on the home equity line of credit, which influences a bit, and margin rates. Yeah, not a ton.
So I want to now talk about what we're seeing in inflation data at the moment, okay? As of June of last year, okay, the data through the first half of last year, here's where inflation was running on the major U.S. inflation indices. The Consumer Price Index was running at 9.06%. Tucker, are you asleep at the wheel?
What?
I'm looking for a hot.
Oh, I didn't have it ready.
I know you didn't have it ready, otherwise we would have heard it. Inflation was running at 9.06%. Inflation was running at 9.06%.
Feeling hot.
There we go.
That's how it was. June of last year, it was like, man, it's hot.
Feeling hot.
When we look at the core CPI, stripping out food and fuel, even that was coming in hot, running 5.91%. Headline PCE was running at 6.98%. PCE is a little less susceptible to some of those rises than what you see in CPI. So that was running, again, almost 7. And core PCE was running at 5.04. So that's where you stood 6 months ago. Headline has now declined by 2.5% down to 6.45 on CPI. Core CPI has declined by really not that much. It moved up a little bit more through the fall, so it's only gone from 5.91 to 5.69. Not a huge move. And on the PCE side of things, headline's gone from 7 to 5, and core has gone from 5 to 4.4. So they're all in a better spot, but again, the biggest improvement has been seen in that headline CPI. Now, when you look at how these are composed, again, they're based on these monthly numbers that we get. Almost all of the highest numbers that we saw were in the first half of last year. So as you come in and lap those, what's known as the base effects, mean that you're probably going to be seeing both CPI and PCE probably declining over the next 6 months as well. Just as an example, for March of last year, CPI came in at 1.24%. So even if you come in at 0.7% for March of this year,
still a decline when
it's
you look
still
year
going to
over
show
year.
inflation year over year coming down.
Right.
So my thesis at this point and where I am, the next 6 months, probably going to continue to show that inflation is improving, okay, in terms of that year over year number. I wouldn't be surprised if headline CPI gets down to somewhere in the 3s to the 4s, okay, by the end of June. Just because there's only so much time out there. But, and here is the but, okay. You're starting to see in commodity markets a reawakening that no one's really talking about much yet. Mm-hmm. But lumber prices have rallied 35% in the last 6 weeks. Gas prices are up about 15% in the last 6 weeks. You got steel prices up, copper prices up. So you're seeing commodity markets starting to reawaken with the idea that, Europe isn't as bad as anticipated. There's going to be more economic activity. China's reopening.
Mm-hmm.
Hey, the U.S. economic data is pretty good. There's no recession happening right now. And so, you're seeing, some activity there. You got pending home sales numbers that are, better than expected. Things are moving along now. And I think you're starting to see a return to some of those upward moves that we don't really like to see.
Mm-hmm.
I think even if they show up in the first half of the year, they're going to be somewhat hidden because the year-over-year number is going to be coming down because it's not going to be as high as it was during the initial stages of the Russian-Ukraine invasion. But then you get out to, July of this year, and headline CPI was 0. If you're replacing a 0 with a 0.4, all of a sudden inflation moves up year over year. Mm-hmm. Then for August, inflation headline CPI was 0.1. Now you're replacing another 0.1 with a 0.4. So where I'm at right now in terms of how I anticipate the data may look, soft landing idea might still be around for another 3 or 4 months. Hey, everything's getting better, right? And then I think you're likely to see an uptick in inflation in the second half of the year, especially if these commodity price, increases keep coming and things like that. And if homes start getting bid the way they're starting to right now, you look at this and you say, okay, maybe you get that headline number down into the 3s or 4s for a month. And then you might have a very quick rebound back up into the 5s and 6s. I'm not saying you get back to 9, but I don't know if you sit in the 3s or 4s for very long on that headline number.
No, to your point, the labor market relatively closely tied to this. I don't think that we're going to see the significant impact of that weakening in that time span that you're speaking of that would sort of temper some of the economic activity. It seems like you look at Visa's numbers, they came out with their quarterly earnings. We'll talk about some of the personal spending data. It's still in a relatively good place. You do have people that are taking down some of their savings a bit, but perhaps they can be propped up just long enough to kind of keep the economy flowing and have some of the inflationary impact subside, but then potentially rear its head. The commodities piece is so hard to project. To your
no
point,
one can,
it could be a real catalyst, but it is just so hard to really gauge. But there are factors out there that could lead to a spike, China reopening being one of them.
So going back a couple months, I said there are 4 real outcomes for 2023. Everyone wants to talk about soft landing because it's warm, it's fuzzy, and it's the happy ending at the end of the day. It's
We'd
like,
love that.
oh, look, and they lived happily ever after. Cute little bunnies.
But you're rooting for it too.
The soft landing?
Yeah.
Of course.
Yeah, okay.
But I'm also a realist.
Okay.
Okay. Where and what I said a couple months ago, I coined this idea of, hey, we might not see a soft landing or a hard landing. We might see what I call a hard go around, which is the economy doesn't necessarily land this year, but neither does inflation. And so the Fed, rather than being able to say, yep, we can taper this down and be done with it, where I am in my base case right now, which, again, might be a 50% probability, is that I think inflation comes down through the first half of the year. I think growth picks up, and as a result of that growth picking up, inflation rears its head again in the second half of the year and requires a second set of hikes, and the entire yield curve has some adjusting to do at that point then. The hard go-around is where I think we're going. It's not necessarily an awful thing, okay, because it means that you have not had a recession this year if that happens. Mm-hmm. But it also means that investors might be due for another round of dealing with, hey, yields are going up, and so how do equities get impacted? We've been dealing with, you can get a 10-year U.S. Treasury at 3.5 now, and you can get a 3-year at 4.4.
And a money market at...
And a money at
4.25.
Okay, 4.25, right? What happens to equities if you can go out and get a money market at 5.5 or 6 and a 3-year bond at 5.5 and the 10 years back at 4.25? How does that because again, for me, and again, it doesn't last forever, but I sit there and I go, gee, if you can pay me 5.5 or 6 just sitting in a money market,
I'm game.
Golly gee willikers, that sounds interesting.
Particularly because the last 20 years, that just has been so far from the case.
Yeah. So I think that there still is a chance of a soft landing, 15 to 20%. There's a chance of a hard landing. I've downgraded that now. Maybe there's only a 20% chance of a hard landing this year because, again, the data is good enough that you may be able to get by, okay? And then there's a 10% chance of stagflationary hell, which is growth falls apart and inflation rears its head. I think that's the least likely scenario out there. Yeah. Everyone loves to talk about it because it's really scary and spooky, but
people like throwing out that term stagflation as well.
Right, it makes you sound smart. Like,
exactly.
oh, like stagflation is
I'm really concerned about
that. Is that what happens when like a male deer like gets like blown up? It's like, I don't know. But anyways, let's take a break. When we come back, Paul, I know you want to talk about some more spending and saving data. Let's do that when we return.
Watch the show every day on Twitch TV, Facebook, and our website, financialexchangeshow.com. We're breaking down the biggest business stories of the day only on the Financial Exchange Radio Network. An extended nursing home stay could deplete your savings in months if you're not prepared. According to Genworth, New England residents could see yearly costs of more than $200,000 by 2030. So if you haven't done your planning yet, now is the time to call Cushing & Dolan. They're experts in estate planning and asset protection, which is critical if you want to enjoy your retirement years. Get their new free guide called Long-Term Care Planning for Procrastinators. Learn about the steps you need to take to protect yourself, your family, and your assets from these high costs. If you or a loved one might need a nursing home, don't delay. Call Cushing & Dolan today at 866-848-5699 and ask for their new guide, Long-Term Care Planning for Procrastinators. That's 866-848-5699. Or you can request the guide online by visiting legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The United States Virgin Islands are St. Croix, St. Thomas, and St. John, and they are the perfect place for your next vacation. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands. Because with perfect weather and year-round temperatures of 75 degrees, relaxation is at its finest. Enjoy their spectacular beaches, world-famous cuisine, golf, tennis, and a wide variety of water sports. The U.S. Virgin Islands is one of the most popular vacation spots in the Caribbean. So head to visitusvi.com and explore their wide variety of travel packages today. There's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com for more information and to book your trip today. Come to America's Caribbean Paradise. Visit usvi.com. That's visitusvi.com.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange legal quick tip of the day. And we're talking about last-minute nursing home lessons that can help save your assets. What can be done last minute to save your home and your liquid assets when one spouse is entering the nursing home?
So with a married couple, you do have more options than as a single person, but with a married couple, your home is not at risk because the community spouse living in the home is allowed to keep the home. Doesn't matter the value, as long as they're living there, it's not countable and non-lienable. They also give the healthy spouse about $135,000 to keep. It's not a lot when you think of the big picture, but all the rest of the money would be at risk. But at least a quick last-minute way of protecting all those other dollars, all over and above that $135,000, would be to basically transfer the assets, those excess assets, to the community spouse, which, by the way, is not a disqualifying transfer, so no 5-year waiting period. And then once that community spouse gets those assets, depending on their age, they can buy what is known as a Medicaid qualifying annuity. These are special annuities. They convert the excess assets into an income stream, and then it's no longer an asset keeping the community spouse over assets. Then the community spouse and the sick spouse are under assets, and they're eligible for Medicaid.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan at 866-848-5699. It's called Long-Term Care Planning for Procrastinators, 866-848-5699. Or if you prefer, you can simply go to their website, legalexchangeshow.com, and request it there.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Wall Street's volatility continues as the threat of a recession lingers. Breaking business news all morning long, only here on the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. St. Croix, St. Thomas, and St. John are the perfect place for your next vacation. Enjoy first-class resorts, exquisite cuisine, perfect temperatures all year round, and fall naturally in rhythm with the heartbeat of the islands. No passport is needed, and there are no more domestic travel requirements to enter. Come to America's Caribbean Paradise. Go to visitusvi.com to book your trip. That's visitusvi.com. Paul, you had a little bit more info on consumer spending and personal income that you wanted to cover.
Yeah, Chuck. So what we saw this morning, the December figures came out. We saw a 0.2% month-over-month drop in personal spending. If you account for or adjust for inflation, that's about a 0.3% drop. The other significant piece here is that the month of November, which had previously shown a uptick in spending, was revised to show a downtick in spending of about 0.1%. If we take a look at just the overall trends from the spending report, goods spending was down. We had gasoline, motor vehicle parts and services, and housing, as well as some transportation and healthcare numbers that were down in terms of what we saw from a spending level here. It contradicts a bit some of the Visa results that we saw, where international travel was quite strong and just payment volumes were up about, I believe, 6 or 7%. But overall, pointing to perhaps this indicator that in terms of discretionary spend, a little bit of a pullback from the U.S. here in terms of spending data.
What's it all mean to you?
To me, I think you're starting to get some of the effects from inflation hitting people's wallets in their pockets, though I don't think it's enough to really substantially slow down the inflation impact we're seeing, because I still feel, and if you read some of the earnings reports from Bank of America, JP Morgan, in terms of the consumer, still in a relatively good place. Credit card defaults, maybe those pick up to a higher level from where they were, and people, like I said, eating into their savings, but it does seem like they're still in a relatively good place to continue to spend on those services items there.
Yeah, I don't think I really have too much else to add there. Again, I think that when you look at this, there are signs that households are stretched. Despite that, some of the recent shifts that we've seen in the last month or two, to me, suggest, okay, you can probably, again, I don't think there's any imminent recession this month or this quarter or anything like that. I think if there is a hard landing, I think you're out into Q3 or Q4, same with a potential rise in inflation, at least on an annual basis. Monthly, you might start to, see things picking back up from where they've been. But again, overall, there's nothing in the data that suggests imminent doom, Q1, batten down the hatches. But yeah, can this continue forever? Probably not. Let's talk a little bit about Chevron, if you will. They announced their earnings early this morning, and they said that they earned $35.5 billion in profits in 2022, more than double the prior year and almost a third higher than their prior record that they had set back in 2011. They also announced a $75 billion share repurchase program, which, just to put that in perspective, Chevron currently has a market cap of around $350 billion. Assuming that they execute this repurchase program at or near current prices, they would basically be buying back a quarter of the company. It's a lot of stock they were buying back.
Federal government loved that release this morning. They were thrilled.
Well, look,
but I don't blame them. I'm just making the point.
No, I mean, look, I find myself in the strange position of defending oil companies.
Right.
Because it's yes, I hate paying as much as I do at the pump, but here's the deal. When oil prices cratered back in 2015 and 2016 because Russia decided it was going to pump a whole bunch of oil to basically kill the U.S. market, did anyone ride to the rescue and say, hey, you guys are, you're losing money hand over fist. A bunch of you guys are going out of business. Mm-hmm. We're going to support you. No, it was, well, that's capitalism. You're on your own. But now, when they're making a whole bunch of money and they don't want to invest a bunch of it back into new drilling because, A, they're terrified of, the same thing happening to them that happened in 2015, which is a foreign country decides to start pumping a bunch of oil and they lose out on all that capex. And B, they're nervous about getting sued by, the Dutch government or the Swedish government or whoever. It's like, why would I take the risk of doing anything when I can just buy back my stock and call it a day?
Couldn't agree with you more. I mean, we've talked about this a lot on the show. It's a situation where, and even going back to 2020, another example of a situation where no one feels badly for them when oil prices retreat to, these lows that we haven't seen in a long period of time. But the energy sector in general has had much more of a focus on how do we return value to our shareholders, whether it be through dividends or, to your point there, with the share buybacks. The energy sector has roared up 44% over the last year. Chevron, their shares, I believe they were up 53% from the last year. So all of these companies have benefited from cutting their debt. They slashed their debt by about 25%, Chevron did. But if you look at their CapEx numbers in terms of what they're spending, it's 25% more from last year that they're spending in 2023. However, it's still $3 billion less than what they had projected or what they were pre-pandemic. So a real cautious outlook and a lot more focus on giving money back to shareholders.
So yeah, there's a lot of chatter about, we're going to do, windfall taxes. Look, that's not going to bring oil prices down.
No.
You're still going to have the same amount of profit. It's just going to be, you're going to tax it. That's not going to change it. If you want oil prices and profits to come down, make it easier to drill. Quick break. Wall Street Watch is next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
If you're thinking of becoming a snowbird, you'll need to put together a strong financial plan to make it happen. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you are getting ready to retire or already there, it's important to take a closer look at your current income sources and expenses if you're trying to determine whether there's room in your budget to snowbird and remain as financially comfortable as possible. Even while you're snowbirding, you can't forget your permanent home because your overall costs can add up and you might find yourself in a difficult position when it comes to your expenses. If you'd like a copy of our brand brand new guide called Can You Afford to Snowbird? You can call us right now at 800-393-4001. Again, the name of the guide is Can You Afford to Snowbird? And it's available at 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Veterans benefits just got a whole lot better. Whether you're about to leave the service or you've been out for decades, the PACT Act gives eligibility for VA benefits to thousands of veterans. The PACT Act is a new law that expands benefits for veterans exposed to burn pits, Agent Orange, and other toxic substances. To learn more, visit va.gov/PACT or call 1-800-MY-VA-411. If you or a loved one served this country, it's time to get the benefits you deserve.
An extended nursing home stay could deplete your savings in months if you're not prepared. Learn about the steps you need to take to protect yourself, your family, and your assets from these high costs. Get Cushing & Dolan's new guide called Long-Term Care Planning for Procrastinators. Call 866-848-5699. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The United States Virgin Islands are St. Croix, St. Thomas, and St. John, and they are the perfect place for your next vacation. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands. Because with perfect weather and year-round temperatures of 75 degrees, relaxation is at its finest. Enjoy their spectacular beaches, world-famous cuisine, golf, tennis, and a wide variety of water sports. The U.S. Virgin Islands is one of the most popular vacation spots in the Caribbean. So head to visitusvi.com and explore their wide variety of travel packages today. There's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com for more information and to book your trip today. Come to America's Caribbean paradise. Visit usvi.com. That's visitusvi.com.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Can You Afford to Snowbird? Mike, there's a big list of different costs people have to account for if they're deciding to move to a second place for the winter. What types of things are on that list?
Yeah, certainly are. I mean, first and foremost are the obvious ones. The actual cost to go rent a place or own a second home and maintain that place throughout the year are going to be substantial, especially if you're going to a popular place during a popular period of time. If you're going to Florida from January through March, that's going to be a lot more expensive than snowbirding in Minnesota. I actually have somebody I know who spends half the year in Alaska, half the year in Minnesota. The other big considerations, though, when you are going down there, what type of vacation is this for you? A lot of people, when they go on a true vacation, they're dining out every night. If you're renting a place with a full kitchen, that might not be the case, and you could find some discounts there. Transportation, once you're in that location. Am I driving down? Am I renting a vehicle the entire time? And then what's it actually going to cost to maintain my primary residence while I am not there?
You can't just turn the heat off in the winter up here.
You cannot up here. And so you might be paying somebody to stop by the house on an occasional basis. The cost of plowing if you're not there to remove the snow on your own. So there are a lot of things that go into this that are just above and beyond the simple, can I afford the rental payment?
Our guide is titled Can You Afford to Snowbird? And there are two different ways that you can request it. First, you can call 800-393-4001. Second option, you can go to armstrongadvisory.com. That phone number again is 800-393-4001, or you can request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Time now for Wall Street Watch here on the Financial Exchange, and markets are trying to close out the week on a winning note as all three major averages are currently in positive territory as Wall Street reacts to new consumer spending and inflation data this morning, while also continuing to monitor fourth quarter earnings. At the moment, the Dow is up by 58 points, S&P 500 is up by 7, and the NASDAQ is about 0.5% higher, or 48 points higher. Russell 2000 also up by nearly 0.5%. 10-year Treasury yield is up by 4 basis points, now at 3.54%, and crude oil is up by 1.33%, or trading at $82.07 a barrel. Intel shares are tanking 7% after the chipmaker posted a dismal miss on its fourth quarter earnings after the bell yesterday, missing forecasts and revealing a substantial decline in sales, profit, and gross margin. Intel's outlook for the current quarter also disappointed, and Chuck and Paul will have more on Intel coming up here in the show. Meanwhile, shares in American Express are up 9.5% despite missing fourth quarter earnings estimates. Amex attributed the slight earnings miss to weakness in spending among small businesses. The company's CEO also noted that they are not seeing recessionary signals. Sentiment is up, however, after Amex issued an optimistic outlook for 2023 and also said it would up its dividend by 15%. Another credit card giant, Visa, also posted fourth quarter results this morning, reported better than expected earnings, and its revenue came in at $7.94 billion, stronger than expected, above forecasts of $7.70 billion. And that stock is up by 2.5% so far today. I'm Tucker Silva, and that's Wall Street Watch.
Hasbro cutting their global workforce by 15%. Again, remains to be seen, how many of these layoffs potentially hit U.S.-based employees, but this will be around 1,000 employees that they are cutting. So, again, it's not like Hasbro is a company with 1 million people that work worldwide, so this is not going to cause a recession in and of itself. But I do find it interesting that, hey, we haven't seen too many companies outside of the tech space that are cutting headcount, but Hasbro doing this, it piques my interest a little bit in terms of what it means for other companies following suit outside the tech sector.
Yeah, I would echo your same sentiments there where, Hasbro, in terms of what it means to overall markets, whether you look at indices out there, it's not a major component, but it is significant, this news article, due to the fact that it's somewhere outside of the tech space that you see layoffs here. IBM also announcing some layoffs as well, but interesting, Chipotle and Airbus were two companies that came out saying that they were actually looking to hire additional workers, 15,000 for Chipotle, 13,000 for Airbus, that they were bringing on new employees. But perhaps this is the first sign that we're seeing outside of the tech sector layoffs, and we'll have to continue to fall if we see it in other areas as well.
One other thing that I picked up from this Wall Street Journal article, the fourth paragraph reads, shares dived 8.5% in after-hours trading. Now, you might think that the word dived is not the appropriate past tense of dive. You might think it is I dove, or shares dove. In fact, if you are speaking English outside the U.S., dived is often commonly accepted, and in the UK, it's actually the standard to use dived instead of dove. So
there's that.
Glad we dove down that rabbit hole.
I just wanted to make sure we dived into it,
Divin. No?
No.
Okay.
No, I need to do a little bit of work on that one. I want to get right to Intel earnings. Let's skip this other corporate layoffs thing for a second. I want to get right to Intel earnings. Intel reported earnings. Was it yesterday or the day before? I
believe it was yesterday.
After the bell yesterday.
After the bell yesterday? Yeah. I don't know that I've ever seen such a bad earnings report from a major company.
It's a really bad report.
I really don't know that I've seen something like this. So the stock, when it opened today, was off around 10%. It's down around 7 now. But it's actually just fascinating what we saw here. So first and foremost, when you look at the actual quarter that they reported, 10 cents earnings per share compared to 20 cents expected, so half of what we were expecting to see. Revenue also missed by 3% and was a 32% year-over-year decline. They took a $664 million net loss compared to a $4.62 billion profit a year ago. The other thing, and this is where it starts to get uglier, analysts were expecting Q1 guidance to be somewhere around $13.9 billion in revenue and 24 cents per share in earnings. Intel guided to a 15-cent loss on 10.5 to 11.5 billion in revenue. They're projecting to miss revenue by like 25%. For a company of this size, that is huge. And the other thing, okay, is that when you look at Intel and basically, how they're managing this and what they're trying to do right now, they're really in kind of a tough spot in that if you look at their income statement, just as an example, they're selling off a bunch of stuff just to maintain cash flow. They cleared like $10 billion in assets to try to maintain cash flow for the most recent quarter. So this is something that is a little bit dodgy when it comes to how the company looks right now. I know there's a lot of chatter about, hey, there's a lot of semiconductor production that's being brought back into the U.S., which is great. But, and again, it's not to say that there are two different issues. The semiconductor production in the U.S. is a long-term thing that you want to accomplish. But Intel's got some real problems for the next year or so, I think, that they're going to have to work through. They didn't even issue guidance for the full year. They said it's too uncertain a market. We can't figure out what it's going to look like.
Just a horrible report, like you mentioned. They're at risk of showing, it seems very likely that they'll have quarterly back-to-back losses, which they haven't shown over the past 3 decades. And you have to wonder, Chuck, they're paying about a 5.2% dividend yield or $1.46 per share. If that's something that they look to scrutinize, I doubt that they would make a change to it because that's really one of the last things that you want to cut. But they are trying to cut about $3 billion in cost cuts this year, and it just runs counter to what they've been suggesting from a long-term perspective, as you alluded to before, where they're investing billions of dollars in creating these manufacturing plants throughout the United States, in Ohio and Arizona. Now, some of that will be subsidized by tax breaks and from government funding, but short-term, a lot of concerns about cash flow. I mean, just the numbers here, Chuck, the quarterly decreases that we see, PC shipments off 29%, CPUs, their chip unit, down 36%. Just some really substantial drops here. I know that there is just a bit of a glut in terms of chip inventories, but these numbers speak to a real significant weakness in the PC market, and it's sort of trickled down to a couple other companies today on this news. I believe NVIDIA and AMD were off as well.
Yeah, so there's an issue here with Intel just trying to maintain orderly operations for the next year or so if things are going to continue to be as weak as they are here. So there's a problem that's being signaled here. Whether it's, unique to Intel or whether it shows up in other chip makers, we'll see over the next couple of weeks here. But this isn't good. And what's really interesting on this, I'm sorry, I'm fascinated by this because it really caught my eye yesterday. Pat Gelsinger, who's the CEO of Intel now, he took over a couple of years ago after some really lackluster performance for the last decade or so. And Gelsinger, from everyone that I talked to, a lot of people liked him as a hire because he actually was an engineer. He understood the technology. He wasn't just, a numbers guy who's going to, crunch out the best numbers. He understood the technology. He's been at the company. It's like, okay, he gets what we're trying to do.
He wanted to focus on innovation, to your point.
Yeah, which, again, in a chip maker is what you want. In Intel, what bothers me about a quarter like this so much is you talk about truly transformative and great American companies. Intel's at the top of the list. They basically, along with Microsoft, created the U.S. PC market in the 80s and 90s. Mm-hmm. I mean, they were the driving force. They were doing all the cool stuff that was pushing everything forward. And now to see like this come out, and it's just ugly. And I don't know that I necessarily blame Gelsinger, for one quarter, because again, like it's not like this quarter is, what he did, but you start putting up a couple more of these, and his tenure's not going to last very long there. And I know a lot of people were optimistic that, hey, he would be the guy to turn it around, and maybe he eventually does. Maybe this is just, a short-term blip. But you can't have too many like this.
No.
You can't have that many like this. Let's take a quick break, and when we come back, talk a little bit more about the international computer chip market.
Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network. An extended nursing home stay could deplete your savings in months if you're not prepared. According to Genworth, New England residents could see yearly costs of more than $200,000 by 2030. So if you haven't done your planning yet, now is the time to call Cushing & Dolan. They're experts in estate planning and asset protection, which is critical if you want to enjoy your retirement years. Get their new free guide called Long-Term Care Planning for Procrastinators. Learn about the steps you need to take to protect yourself, your family, and your assets from these high costs. If you or a loved one might need a nursing home, don't delay. Call Cushing & Dolan today at 866-848-5699 and ask for their new guide, Long-Term Care Planning for Procrastinators. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
If you're thinking of becoming a snowbird, you'll need to put together a strong financial plan to make it happen. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you are getting ready to retire or already there, it's important to take a closer look at your current income sources and expenses if you're trying to determine whether there's room in your budget to snowbird and remain as financially comfortable as possible. Even while you're snowbirding, you can't forget your permanent home because your overall costs can add up and you might find yourself in a difficult position when it comes to your expenses. If you'd like a copy of our brand new guide called Can You Afford to Snowbird, you can call us right now at 800-393-4001. Again, the name of the guide is Can You Afford to Snowbird, and it's available at 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands are St. Croix, St. Thomas, and St. John, and they are the perfect place for your next vacation. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands. Because with perfect weather and year-round temperatures of 75 degrees, relaxation is at its finest. Enjoy their spectacular beaches, world-famous cuisine, golf, tennis, and a wide variety of water sports. The U.S. Virgin Islands is one of the most popular vacation spots in the Caribbean. So head to visitusvi.com and explore their wide variety of travel packages today. There's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com for more information and to book your trip today. Come to America's Caribbean paradise. Visit usvi.com. That's visitusvi.com.
Veterans benefits just got a whole lot better. Whether you're about to leave the service or you've been out for decades, the PACT Act gives eligibility for VA benefits to thousands of veterans. The PACT Act is a new law that expands benefits for veterans exposed to burn pits, Agent Orange, and other toxic substances. To learn more, visit va.gov/PACT or call 1-800-MY-VA-411. If you or a loved one served this country, it's time to get the benefits you deserve.
An extended nursing home stay could deplete your savings in months if you're not prepared. Learn about the steps you need to take to protect yourself, your family, and your assets from these high costs. Get Cushing & Dolan's new guide called Long-Term Care Planning for Procrastinators. Call 866-848-5699. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network.
In a significant win for the United States, Japan and the Netherlands are going to be joining the United States in limiting China's access to advanced semiconductor machinery. Now, you might say, okay, I understand Japan. What's the deal with the Netherlands? Well, here's the deal with the Netherlands and why this actually matters. There's a Dutch company by the name of ASML, and they make the lithography machines that actually then make semiconductors, at least the most advanced ones. So if you can't buy these lithography machines from ASML, you really don't have... There's no one else who makes these things. There's no one else. They are the only game in town, and it's just how the market's developed over the last 30 or 40 years. So why this is really big is because... really, aside from, the EU as a whole, you could say to a certain extent, but maybe you'd like to see South Korea included in here as well. But you really have the three most important individual countries that are now committed to saying, we're not sending any high-end proprietary technology or IP to mainland China because we view it as too much of a threat. And that, to me, I think is a major win in trying to, deal with some of the more militaristic aims of China.
Militaristic, that's the good point to bring up. Why does this matter? It's because those types of advanced chips can be used in military technology and other AI capabilities. So that's why this is so significant to box out China from these kinds of chips for that access point. If you look at the three major companies in the semiconductor manufacturing process in terms of creating some of the most important machinery or just being a cog in sort of that wheel. Applied Materials, which is based out of the U.S., that's one of them. ASML, which Chuck just spoke about in the Netherlands, and then Tokyo Electronics in Japan. Those are three of the major players in the whole process. Obviously, Taiwan Semiconductor is the major company for the manufacturing side, but you need other components as part of that process. Those three that I just mentioned, all Japan, Netherlands, and U.S., them joining together is a really significant news.
The United States Virgin Islands are St. Croix, St. Thomas, and St. John, and they are the perfect place for your next vacation. From the moment you arrive, you find yourself falling naturally in rhythm with the heartbeat of the islands, because with perfect weather and year-round temperatures of 75 degrees, relaxation is at its finest. Enjoy their spectacular beaches, world-famous cuisine, golf, tennis, and a wide variety of water sports. The U.S. Virgin Islands is one of the most popular vacation spots in the Caribbean, so head to visitusvi.com and explore their wide variety of travel packages today. There's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com for more information and to book your trip today. Come to America's Caribbean Paradise. Visit usvi.com. That's visitusvi.com.
China is poised to become the number 2 exporter of passenger vehicles worldwide, surpassing both the U.S. and South Korea. And this has a few different wrinkles to it. The first is, on one hand, you have a lot of European companies that are happy to produce more vehicles in China as opposed to in their home countries because it's much cheaper to do so and they can lower their cost structure. Mm-hmm. The downside of that is that those same European companies are then offshoring a lot of the European manufacturing capacity that makes up really the bulk of, the European manufacturing economy right now. And so are you kind of cutting off your nose to spite your face? It feels like it a little bit. And so the third piece that I think is interesting to watch on this is with all of the semiconductors and GPS and everything like that are now built into Chinese vehicles, is there a lack of trust there, or am I just projecting my own lack of trust and saying, I don't know that I would necessarily feel comfortable buying a vehicle made in China right now, especially with onboard GPS, because I don't necessarily want that information getting back to the Chinese government, which it often does.
It's the first thing that my head went to too, Chuck, just sort of thinking about them taking over such a significant position as the number 2 exporter. That was news to me. Quite frankly, if you had asked me, I would not have pinned them at number 2. And given what we just talked about in terms of the semiconductor market, it is concerning that they've reached the number 2 level here, but you understand the reasons why, because of the cheap labor and the cost efficiencies that they can get. Typically, they're exporting most of their cars to, it seems like, Europe as well as some other Asian countries, so not a lot to the U.S., but it could become a concern as they continue to take a dominant spot in the market.
Yeah, so I think that this is something that is obviously going to be, a question going forward is, hey, how much, auto manufacturing capacity gets built up in China and how much of that turns into export capacity. But again, I look at Europe just as an example. The European economy, it's underpinned by companies like BMW and Mercedes and, again, things like that produce a lot of vehicles and a lot of economic activity. If you start sending that to China, how much do you weaken the European economy so that you can't buy the cars that are coming from China? And what are you getting back in terms of a product that is secure from a technological perspective and not a backdoor to Chinese espionage, which is always a concern of mine? I don't know. Last story that I want to cover this hour. Green Line had a signal problem on one of their lines last night. They ended up having to close down a couple of trains, and they had passengers that were forced to walk through tunnels because of where trains had to get stopped.
Spooky.
So all I know is...
That's your first reaction.
Yes. No, honestly, spooky is it. Because, Tucker, when I lived in Somerville, the rats that I saw there...
Thank you.
They were like small dogs, sometimes even big dogs.
Not frustration, just scared.
No, just scared. Because the rats will... Like, Splinter lives down there from the Ninja Turtles.
At least you were let off the train. We had that Amtrak story where they were trapped on there for 17 hours or something.
But again, just further proof of, just how bad things are on the T these days. Also, on the Orange Line, they haven't taken any new deliveries of their new Orange Line cars in 7 months now because when they signed the stupid deal that they signed, they viewed it more as a jobs program than trying to actually build reliable vehicles, and so the program's been an absolute disaster. Quick break. When we come back, more Financial Exchange.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange legal quick tip of the day. And today we're talking about last-minute nursing home lessons that can help save your assets. Todd, more and more people are providing in-home care for their loved ones. Is there anything a care provider can do that would be beneficial to them or the family?
So if you're already providing care for an individual at home, and more people, as you said, are in fact doing that, the best thing to do is to set up a personal care contract, right? A personal care contract is something that allows you to get paid by your family member, and as long as you report it on your income tax return and prepare a personal care contract, make sure you get an elder law lawyer to help you prepare that contract because it's got to be done right. But if you do those two things, get the contract and provide the care and put the income on your income tax return, the transfers are non-disqualifying transfers. So even if you don't make the 5 years, those dollars that you're moving will not need to be returned and they will be protected. Also, while you're doing that, set up the trust and get the 5-year clock started. Put some assets in because you just never know if you're going to make it or not, and you would always want to have that 5-year clock running to protect your assets.
Cushing & Dolan has written a brand new guide especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan. It's called Long-Term Care Planning for Procrastinators. You can call 866-848-5699, or you can simply request it from their website, legalexchangeshow.com. Once again, simply call 866-848-5699, or get it from their website at legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
It's easy to imagine a move to a warmer climate for just a few months each year, but you need to have a sound financial plan in place if it's going to work. If you're thinking of buying a new place in Florida, you need to be sure you can afford another down payment. Perhaps you've thought about buying and then renting to a tenant, or maybe you just want to rent a place for yourself. Regardless of which way you decide to go, having a solid
solid financial strategy is necessary. When it comes to snowbirding, there are a lot of moving parts. In this month's new guide, titled Can You Afford to Snowbird, we'll walk you through ways to make sure you understand how to build a strong plan that can take you away from the cold. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network. The United States Virgin Islands are St. Croix, St. Thomas, and St. John, and they are the perfect place for your next vacation. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands. Because with perfect weather and year-round temperatures of 75 degrees, relaxation is at its finest. Enjoy their spectacular beaches, world-famous cuisine, golf, tennis, and a wide variety of water sports. The U.S. Virgin Islands is one of the most popular vacation spots in the Caribbean. So head to visitusvi.com and explore their wide variety of travel packages today. There's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com for more information and to book your trip today. Come to America's Caribbean paradise. Visit usvi.com. That's visitusvi.com.
Veterans benefits just got a whole lot better. Whether you're about to leave the service or you've been out for decades, the PACT Act gives eligibility for VA benefits to thousands of veterans. The PACT Act is a new law that expands benefits for veterans exposed to burn pits, Agent Orange, and other toxic substances. To learn more, visit va.gov/PACT or call 1-800-MY-VA-411. If you or a loved one served this country, it's time to get the benefits you deserve.
An extended nursing home stay could deplete your savings in months if you're not prepared. Learn about the steps you need to take to protect yourself, your family, and your assets from these high costs. Get Cushing & Dolan's new guide called Long-Term Care Planning for Procrastinators. Call 866-848-5699. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Can You Afford to Snowbird? Mike, the first decision that someone needs to make if they're trying to figure out if they should move to a second place is whether or not they should be buying or renting. How do they make that decision?
Yeah, it is probably the first one once you get past the idea that you want to get out of the Northeast in the middle of winter, in the middle of January. Once you've come to that conclusion, that's the next logical step. It comes down to a number of different factors, but the tough part about buying is that there's a lot of permanence associated with it. Not that you can't reverse that decision, but if it's your first time going and trying out a new space, oftentimes renting can be the more appealing decision there when it comes to spending some time outside of your primary residence. Obviously, you're not worried about the maintenance costs and everything else associated with it. All of that having been said, there is something to owning a piece of property, knowing that it's yours and knowing that you'll be able to return to the same place over and over again. You might have the best relationship in the world with the person who is renting you their home for those 3 months a year, but when push comes to shove, if that person needs to sell that property and move on to a different tenant, they're going to do so. So it requires some thinking and real consideration, especially if this is your first time making the consideration to snowbird.
Our guide this month is titled Can You Afford to Snowbird? And there are two ways that you can request it. First, you can call 800-393-4001. Second option, you can go and download it at armstrongadvisory.com. Either way, it doesn't cost you anything. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Can you afford $15,000 a month for a nursing home? If not, you need to call Cushing & Dolan and get their new guide called Long-Term Care Planning for Procrastinators. Don't let a nursing home stay clean out your savings. Call 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends. Plus, get breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. You too can support our great American heroes by visiting financialexchangeshow.com/DAV. And now, it's time for the Financial Exchange with Chuck Zodda and Mike Armstrong.
Goldman Sachs CEO David Solomon just saw a 30% cut in his salary down to $25 million, which means he's going to have to get out there on that DJ circuit and play some additional gigs if he wants to make up that difference.
Maybe mix in some high school dances or proms here and there.
Yeah, you do a little bit of that. Maybe a wedding or two here and there.
Hey, maybe some trivia night stuff.
Yeah, just like a little open mic night at the local bar. That'd be kind of a fun little change up for him. So, wouldn't it be nice to take a 30% pay cut down to $25 million?
Yeah, that would be nice, Chuck. That would be very nice.
Golly gee willikers. Taking a look at markets, the Dow is off 74 points, the S&P is down 3, NASDAQ is up 19. So, again, this has been a really resilient market since the October bottom that we saw. You look at where indices have risen. The Dow's risen almost 20% off its October lows. The S&P is up about 12-13%, and the NASDAQ is up pretty significantly. Off those lows as well. I'm just pulling it up right now just so that I can actually get a good look at it. NASDAQ is, not up as much as you would think there. NASDAQ's up about 11-12% off those lows, but it seems like all of it has been in the last couple of weeks that we've seen, a lot of that come back. A lot of businesses out there still saying, hey, tech might be cutting workers, but we're still trying to hire more people. And it's not really because of COVID anymore. Okay? And by not really because of COVID anymore, I mean it's not. Okay? Basically, all the data that we see today that points to, hey, here's who's dropped out of the workforce and here's why they've dropped out. There's really no one out there in any meaningful fashion who's saying that they can't work because of COVID. Yes, there are people, who fit that description, but they are few and far between. And instead what we're seeing, the data that I continue to see is it's largely retirees that are retiring at more historically normal levels as opposed to working longer, which had been the trend for the last 15 to 20 years.
That's what I've been consistently saying since this has become an issue where we now have 10.5 million open jobs and if you look at the ratio of jobs out there to those who are unemployed, about a 1.7 ratio of those two. And that's been my focus the whole time, Chuck, is since the pandemic started, maybe because we work with a lot of retirees, it just felt as if from anecdotal evidence, as well as the Dallas Fed, I believe, did a study where they said about 3.5 million people retired, post-COVID era. It just seemed like those were the people who were dropping out of the workforce. And, they ran a stat in this Wall Street Journal piece where the amount of people employed at age 66, the participation rate was about 38%, but if you drop down just to 64, it was at 46%. So in that baby boomer demographic, which 66 is the, I believe, most populous age range there in that baby boomer demographic, not as many people working, and that's why you have this shortage. The theories regarding the young men playing video games on the couch, to me, I don't feel are contributing as much to this.
If you look right now, okay, at what's called the prime age employment to population ratio, or the prime age EPOP, if you want to sound cool in economic circles, which not many of human beings want to, but, some people do. The prime age is defined as age 25 to 54. So the key time when most people would be working, okay? As of right now, December, prime age EPOP is coming in at 80.2%, which means that 80.2% of the human beings in the United States between those ages, they're employed. Less than 20% are not. What have we seen historically, okay? Let's talk a little bit about, some of the most robust economies that we've had. Tech bubble, okay? Whenever, a lot of people look back really fondly on the late 90s economically and say, yeah, everything was great. Gas was cheap, jobs were plentiful, the stock market was roaring. That was great, right? Prime age EPOP hit its record then, 81.7%. We're at 80.2. So if you do want to look at that gap right there and say, hey, in that 30-year window from age 25 to 54, there's a 1.5% gap from that peak. Okay, but remember, that peak is the tech bubble when, things were a little bit nutty. Other than the tech bubble, the only other time that we have, there have been three other times, that we've been this high. The first was immediately prior to the pandemic. Mm-hmm. We were at 80.7%. The second was in November of 2006. Just prior to the world ending for the financial crisis, we were at 80.5. And the third time, was in November of 1989, when we got to 80.7% as well. Other than that, there are no other times since we've begun tracking this. And by the way, the tracking goes back to 1948, okay? There are no other times that we've been tracking this that we have had a higher percentage of American adults aged 25 to 54 employed. 3 little brief windows. And other than that, nothing. Now, granted, this is also, if you look at the data from basically through the mid-1980s, prime age EPOP was well lower because in many families up until then, you had women who often weren't working. Mm-hmm. They were housewives. They were homemakers. Mm-hmm. And so the data from, you go and look at 1960 and you're like, man, prime age EPOP was 66%. What's the deal there?
That has to be it.
The norm was not for women to be working at that time. So you get up to 80.2%, you are freaking flying, okay, in terms of that prime age. Yes, could you be a little bit higher? Okay, fine. If you do the math out, maybe you could get 1 million more people into the workforce. There are 10 million job openings still. It fills 1/10 of them.
Exactly my point, to where the number of retirees at that 3.5 that I think the Dallas Fed have released, much more significant of that makeup of 10.5 million available versus this statement out there, the sentiment out there that this younger worker is not getting out there and working. We're only a 0.5 percentage point off from pre-pandemic levels, basically what you're saying. I think it was 80.7 pre-pandemic. Now we're at 80.2.
Yeah, the other piece here, okay, is when we look at continuing unemployment claims. So how many people are, actively on unemployment? Not new claims, but continuing ones. You're at 1.67 million right now, okay? The last time that you had unemployment claims this low was 1973. And the U.S. population was a lot smaller back in 1973. Just to, again, put it in perspective, the population today is like 330 million. If you go and take a look back at 1973, 211, and you have the same number of people on unemployment claims. So it's not that people are sitting out there on unemployment. It's not that, people aren't working. Again, the data shows you've got basically where we've been topping out historically in terms of, workforce of that prime age. It's just there's too much stuff that needs to be done now and not enough people. And I will say this is a problem when you have the demographics that we have, where you don't have enough kids that are being born to necessarily replace all of the jobs that are being left. Or, hey, you have some really good growth and you need, some... Again, I've been saying for the last 2 years, this is automation's time to shine. If all this promise of automated this and automated that is going to come to fruition, hey, you got businesses that can't find enough people.
We need
this is your chance to automate.
Efficiency, easy for me to say.
Yes, you do. So that's what's going on in the labor force right now. And again, just another story that's kind of tied into this. CVS and Walmart, they're cutting pharmacy hours because they've got a staffing squeeze right now. They can't find enough pharmacists to operate these facilities. Walmart's going to be reducing pharmacy hours to closing at 7 p.m. instead of 9 p.m. at almost all of their stores. CVS and Walgreens, they are both putting their pharmacies on reduced hours as well. And I don't know if this is an issue with we're just not training enough pharmacists and not enough people are going to pharmacy school. That could be a possibility. I know that, again, with how many pharmacies now are just run by the major chains, I know it's not viewed the same way that it used to be. I know a number of people that worked in pharmacies, small local ones back in the 70s, 80s, and they speak very fondly of it. And then they go, went to work for a CVS or Walgreens and were like, this is not what, my pharmacy experience was previously. So I don't know what the issue is there, but there's clearly a problem where we don't have enough pharmacists today.
I thought that was a relatively well-compensated position to
it
have.
Is.
You can make some good money. As a pharmacist, I think they mentioned in this article here, the technicians, Walmart raising the hourly wages, but that just is the technician wages at $20 an hour, because I know that pharmacists themselves make a pretty significant salary just based on my recall there. I don't really understand why there is such a significant shortage, and I was hoping that they'd provide some sort of additional statistics on, how many they need. But clearly, if you're pulling back hours by this much, this is hitting all the major pharmacy chains, CVS, Walmart. They account for many of the chains out there. There's a lot of bureaucracy in that job, and I think it's a lot more restrictive in terms of what they can do versus what they did in the past. So perhaps that's the reason why. And there is a reasonable amount of training that goes into that position. I believe it's 5 or 6 years of schooling to get that designation, and a lot of hard work that goes into it too.
Do you know what state has according to ZipRecruiter, what state has the lowest average salary for pharmacists?
West Virginia?
Louisiana. $83,000. Okay. $83,000 in Louisiana goes pretty far.
It's good coin.
Okay. When you talk about Northeast states, okay, again, they're typically in kind of that highest compensated area. You're generally talking anywhere, and this is for average salary for pharmacists, anywhere from about $110,000 up to $125,000.
That was going to be my guess. Yeah, $120,000.
So, again, it's a good paying job. I don't know why there aren't enough people there, but I don't know if we're not training enough or if it's just the actual work environment is just not good now. I don't know what's going on.
It's definitely impacting the lines, by the way.
Yeah, the lines are long.
Huge lines.
Yep.
It's bad.
Yep. Let's take a quick break, and when we come back, we'll talk about what is going on in retail with their labor issues as well.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
It's easy to imagine a move to a warmer climate for just a few months each year, but you need to have a sound financial plan in place if it's going to work. If you're thinking of buying a new place in Florida, you need to be sure you can afford another down payment. Perhaps you've thought about buying and then renting to a tenant, or maybe you just want to rent a place for yourself. Regardless of which way you decide to go, having a solid financial strategy is necessary. When it comes to snowbirding, there are a lot of moving parts. In this month's new guide, titled Can You Afford to Snowbird, we'll walk you through ways to make sure you you understand how to build a strong plan that can take you away from the cold. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. An extended nursing home stay could deplete your savings in months if you're not prepared. According to Genworth, New England residents could see yearly costs of more than $200,000 by 2030. So if you haven't done your planning yet, now is the time to call Cushing & Dolan. They're experts in estate planning and asset protection, which is critical if you want to enjoy your retirement years. Get their new free guide called Long-Term Care Planning for Procrastinators. Learn about the steps you need to take to protect yourself, your family, and your assets from these high costs. If you or a loved one might need a nursing home, don't delay. Call Cushing & Dolan today at 866-848-5699 and ask for their new guide, Long-Term Care Planning for Procrastinators. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The United States Virgin Islands are St. Croix, St. Thomas, and St. John, and they are the perfect place for your next vacation. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands. Because with perfect weather and year-round temperatures of 75 degrees, relaxation is at its finest. Enjoy their spectacular beaches, world-famous cuisine, golf, tennis, and a wide variety of water sports. The U.S. Virgin Islands is one of the most popular vacation spots in the Caribbean. So head to visitusvi.com and explore their wide variety of travel packages today. There's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com for more information and to book your trip today. Come to America's Caribbean paradise. Visit usvi.com. That's visitusvi.com.
Veterans benefits just got a whole lot better. Whether you're about to leave the service or you've been out for decades, the PACT Act gives eligibility for VA benefits to thousands of veterans. The PACT Act is a new law that expands benefits for veterans exposed to burn pits, Agent Orange, and other toxic substances. To learn more, visit va.gov/PACT or call 1-800-MY-VA-411. If you or a loved one served this country, it's time to get the benefits you deserve.
An extended nursing home stay could deplete your savings in months if you're not prepared. Learn about the steps you need to take to protect yourself, your family, and your assets from these high costs. Get Cushing & Dolan's new guide called Long-Term Care Planning for Procrastinators. Call 866-848-5699. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Business and financial news affecting the markets and your wallet. We've got it all, straight from Wall Street, right here on the Financial Exchange Radio Network.
All right. Time for trivia here on the Financial Exchange, and it's brought to you by Encore Boston Harbor. Visit EncoreBostonHarbor.com and see for yourself why Encore is a Forbes 5-star award winner for both hotel and spa. As we reported over the last couple days, Google is facing a second antitrust lawsuit from the DOJ. This time, the DOJ is seeking to break up Google's online ad division. So we'll be asking a trivia question related to Google. What was Google's name before it became Google? Once again, what was Google's name before it became Google? Be the sixth person to text us at our number 617-362-1385 with the correct answer, and you'll win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Encore Boston Harbor. Be sure to include the keyword Encore in your text, and we'll be giving away the Encore gift card in the next couple of segments. Once again, 617-362-1385. 1385. And the sixth correct response today will be our winner. See complete contest rules at financialexchangeshow.com.
Let's talk a little bit about the retail space, Paul. We've focused a lot on tech when it comes to layoffs. We haven't heard much out of the retail space yet, and I know a lot of retailers are trying to sort through what they should be doing right now.
Yeah, I thought this article was going to be focused on more their square footage and their actual physical brick and mortar locations, but more focused on how much to spend in terms of staffing. They've also announced, similar to some of the tech companies that we've covered on the show, that they will be laying off some employees. Saks Fifth Avenue, or Saks Off Fifth, the off-price retailer, announced about 100 of its employees would be laid off. Stitch Fix, 20% of its salaried workers, and then Wayfair, locally based in Boston, going to lay off about 1,700 employees. And it seems like the recurring theme that we hear, Chuck, from both companies in the tech sector space as well as retailers is that we saw a huge surge in demand during the pandemic for e-commerce spending and just spending in general because people were at home. The government infused trillions of dollars quite literally into people's pockets. And a lot of these companies ran with that demand thinking that it would continue on a linear trajectory or it was here to stay. And that hasn't been the case, and that's left them in a precarious position now where we have inflation and concerns of recession, where many of them are taking this time to trim headcount and cut some of their expenses. And retailer, no different than tech, starting to do some of this as well.
Speaking of a retailer that is really not in good shape right now, Bed Bath & Beyond reveals yesterday that they basically have defaulted on one of their credit lines, and as a result, all of their banks have cut their other credit lines off now. So it would seem to me that a bankruptcy filing is likely weeks at most away, probably days, based on what we are seeing right now. The stock was down 22% yesterday. This after it rallied from $1.31 on January 6th up to $5.24 on January 12th before losing 50% in some kind of horribly misguided, just fake short squeeze type thing that's being promoted by crazy internet traders. It's just so reminiscent of 2020. And I just feel for the people that, are reading some stupid forum online somewhere.
To the moon.
And they're like, oh, I'll buy this on January 12th for $5.24, and now it's worth, half of what it was worth. It's like, honestly, it really bothers me that there's so much crap that just gets promoted out there. Because, again, you can look back at, like, the original GameStop trade back in early 2021 and be like, wow, that was actually a genius thesis. Like, there was actually something there. And somehow it's just morphed into, well, whenever something bad is going on with the stock, it's going to go up. And it's just like, guys, that's not how it works. In a bankruptcy, as a common stockholder, you are going to get wiped out 99 times out of 99.
You're left with the bag. You're getting nothing.
So this stuff really bothers me as far as the scam artists who, go online and tell people to do stuff like this. It really bothers me.
It also serves as a learning lesson for those younger investors who jump in and think, to Tucker's point, stocks only go up, they go to the moon. This is the hardcore truths that you learn if you're in that space where you're just, messing around in your early 20s trying to start investing.
So that's what's going on with Bed Bath & Beyond. Taking a look at markets right now, pretty mixed, relatively flat. Dow's off 37 points, S&P's up 2, Nasdaq's up 42. 10-year U.S. Treasury selling off a bit up to 3.53%. Oil is now down 95 cents a barrel after being up about $1 a barrel earlier today. Gold is down 10 cents an ounce, and that's what we have going on in markets at the moment. We're going to take a quick
Radio Network. You've worked hard to achieve wealth and prosperity. Don't let an unexpected nursing home stay take it all away. According to Genworth, the average monthly cost for a private room in New England could increase by up to 25% by 2030. If you or a loved one might need nursing home care in the near future, and you're not prepared to handle these kinds of costs, you need to call the experts at Cushing & Dolan and get their new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn strategies that can help you protect your assets that you've worked a lifetime to attain. Don't put off today what you might really need to do tomorrow. Call Cushing & Dolan right now at 866-848-5699 and get your free guide called Long-Term Care Planning for Procrastinators. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The United States Virgin Islands are St. Croix, St. Thomas, and St. John, and they are the perfect place for your next vacation. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands. Because with perfect weather and year-round temperatures of 75 degrees, relaxation is at its finest. Enjoy their spectacular beaches, world-famous cuisine, golf, tennis, and a wide variety of water sports. The U.S. Virgin Islands is one of the most popular vacation spots in the Caribbean. So head to visitusvi.com and explore their wide variety of travel packages today. There's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com for more information and to book your trip today. Come to America's Caribbean paradise. Visit usvi.com. That's visitusvi.com.
If you're thinking of becoming a snowbird, you'll need to put together a strong financial plan to make it happen. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you are getting ready to retire or already there, it's important to take a closer look at your current income sources and expenses if you're trying to determine whether there's room in your budget to snowbird and remain as financially comfortable as possible. Even while you're snowbirding, you can't forget your permanent home because your overall costs can add up and you might find yourself in a difficult position when it comes to your expenses. If you'd like a copy of our brand new guide called Can You Afford to Snowbird, you can call us right now at 800-393-4001. Again, the name of the guide is Can You Afford to Snowbird, and it's available at 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange legal quick tip of the day. And today we're talking about last-minute nursing home lessons that can help save your assets. Todd, more and more people are providing in-home care for their loved ones. Is there anything a care provider can do that would be beneficial to them or the family?
So if you're already providing care for an individual at home, and more people, as you said, are in fact doing that, the best thing to do is to set up a personal care contract, right? A personal care contract is something that allows you to get paid by your family member, and as long as you report it on your income tax return and prepare a personal care contract, make sure you get an elder law lawyer to help you prepare that contract because it's got to be done right. But if you do those two things, get the contract and provide the care and put the income on your income tax return, the transfers are non-disqualifying transfers. So even if you don't make the 5 years, those dollars that you're moving will not need to be returned and they will be protected. Also, while you're doing that, set up the trust and get the 5-year clock started. Put some assets in because you just never know if you're going to make it or not, and you would always want to have that 5-year clock running to protect your assets.
Cushing & Dolan has written a brand new guide especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan. It's called Long-Term Care Planning for Procrastinators. You can call 866-848-5699, or you can simply request it from their website, LegalExchangeShow.com. Once again, simply call 866-848-5699, or get it from their website at legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. For your chance to win our daily trivia contest, text us at 617-362-1385 and use keyword Encore. Complete rules are available at financialexchangeshow.com. This is the Financial Exchange Radio Network.
What was Google's name before it became Google? Well, that would be Backrub. Yeah, Backrub. Google was initially started as a research project with that name by two students at Stanford University, and Backrub would become Google.com on September 15th, 1997, and then the company was incorporated on August 4th, 1998. Our winner today is taking home that Financial Exchange Show t-shirt was Dennis from Pennacook, New Hampshire, and the winner of our weekly gift would be the Encore $100 gift card was John from Dedham, so he's taking home that gift card. Congrats to both winners. Trivia is brought to you by Encore Boston Harbor. Visit EncoreBostonHarbor.com and see for yourself why Encore is a Forbes 5-star award winner for both hotel and spa.
Paul, are you pro egg?
I am pro egg. How do you guys take your eggs? Our favorite way to
Over
take
easy.
your eggs?
Over easy.
Okay.
It's the only way to do an egg.
Scrambled.
Yeah.
If you wanted my 2 cents.
I see. You know, it's kind of a waste of, the natural egg form.
Are your eggs fluffy, Paul?
They are.
How do you get them so fluffy?
Throw a little milk in there.
Yep.
How long do you whisk for?
I'm an over whisker. I'd say 30 seconds plus.
Now, the key to a good fluffy scrambled egg is you put it on heat, up high, whisk, 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 take it off heat, whisk, 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 whisk. You got to do the heat on, heat off, heat on, heat off.
It's kind of like Karate Kid, but for an egg.
Yes, exactly.
Thoughts on hard-boiled eggs?
Too big of a process.
Not great on their own, but fantastic in egg salad.
I would agree. I'm not a big fan of it.
Hard-boiled egg on its own, it's kind of like, okay, the yolk's a little dry and flaky and everything. It doesn't do it for me. Also, big deviled egg fan.
Oh, yeah. Those are dangerous.
For Easter every year, my father-in-law, we usually do about 5 or 6 dozen deviled eggs.
Yeah.
And then the issue is that you're stuck eating deviled eggs for the rest of the week, where by the end of the week you're like, okay, I'm good. But, we do a bunch of different kinds. I mean, we'll mix just about everything in there.
Yeah, I can put those down all day. Single-handedly skyrocketing my cholesterol in the process. Yeah, but they're so good.
We'll do like 11 or 12 different kinds of deviled eggs.
Mm-hmm.
So you do kind of your basic, and then you got your chive and your dill and stuff like that. But we've done you put some salami in there, you put some bacon in there. We've done some crab occasionally. I mean, you can get pretty out there. Do some spicy ones. The one that didn't go over particularly well was tuna. It was just
too eccentric.
Yeah, there was just too much going on in there. Anyways, let's talk egg prices. So obviously they've gone up significantly. I make the case that, it's unfortunate they've gone up as much as they have, but pound for pound and dollar for dollar, there's still no cheaper way to get good protein in your diet.
Mm-hmm.
There are a couple other ways that you can get similar, but again, it's just, hey, it used to be, okay, you can get a thing of eggs for $2, and now it's 5 or 6, and it's just some sticker shock there. So the whole thing is caused by the fact that you got this bird flu that's been going around, and a whole bunch of chickens have had to be killed because of it, and so it takes time to replenish the chickens that lay the eggs, because the chicken comes before the egg, but after another egg. So it's going to take a little bit of time. You're seeing people come up with all kinds of weird things to make money off of this.
Mm-hmm.
You got one guy out there that is taking eggs and freeze-drying them and saying, hey, if this happens again, you can use my freeze-dried eggs for up to 20 years without any problems. He's selling them for $20 a dozen, so that's kind of an expensive egg insurance policy, given that it's like 4 times the cost of regular eggs. It's like things would have to get really bad for that to make economic sense. You got other people that are selling a mung bean-based egg substitute called Just Egg.
Okay.
Now, if you're not familiar with mung beans, okay.
I am not.
I am not.
It's, again, you hear it, and the first thing that I think of is like
Dung
beetle.
Just a really bad name for them.
So it's actually a bean that's cultivated primarily in
like peas.
Southeast Asia. It looks kind of like a cross between a pea and a lima bean.
Okay. Yep.
And apparently you can make an egg substitute out of it.
Yeah.
So there's that.
No chance.
Give
me the egg.
Yeah, I look at it and I say, yeah, give me the egg. I'll pay a few extra bucks for it. It still is one of the cheapest. I mean, think about it. You get a dozen eggs. You've got 6 meals where you're paying $1 a meal for your protein in there if you're doing 2 eggs a meal.
Yep.
That's a good price still. It's not what it used to be, okay? My grandfather always used to talk about, hey, growing up during the Depression, they had egg sandwiches more than anything else because it was the only thing they could afford. Couldn't spend money on anything else. It was eggs, and that was basically it. So it's not as cheap as it used to be, but again, I still think dollar for dollar, still a good bargain when it comes to the protein side of the ledger.
My grandmother would always say, a wedding cost $200 back in my day. She just refused to acknowledge inflation, but you talking about your grandfather made me think of that, where I was like, yeah, Grandma, there is inflation. Things cost more over time.
An extended nursing home stay could deplete your savings in months if you're not prepared. According to Genworth, New England residents could see yearly costs of more than $200,000 by 2030. So if you haven't done your planning yet, now is the time to call Cushing and Dolan. They're experts in estate planning and asset protection, which is critical if you want to enjoy your retirement years. Get their new free guide called Long-Term Care Planning for Procrastinators. Learn about the steps you need to take to protect yourself, your family, and your assets from these high costs. If you or a loved one might need a nursing home, don't delay. Call Cushing and Dolan today at 866-848-5699. and ask for their new guide called Long-Term Care Planning for Procrastinators. Once again, 866-848-5699, or you can request the guide online at their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing and Dolan. Cushing and Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Paul, do you like Pitbull, the rapper, not the dog?
He's okay. He's got some jams from back in the day.
Yeah, I mean, Mr. Worldwide, very big time back in kind of that 2010 through 2015 time frame. Seems like, every week there was a new hit coming out. And one of those hits was Fireball, I believe. The song, not the whiskey. The reason we bring this up is because the whiskey, or rather the maker of the whiskey, is being sued because in addition to the Fireball Cinnamon whiskey, the maker of it, Sazerac, makes what they call Fireball Cinnamon that they sell at a bunch of gas stations that are not allowed to sell actual hard liquor. And so this is a lower proof malt liquor that they sell instead with very, very similar, almost identical packaging.
I got to say, this surprised me when I saw this. I was like, it's not whiskey? What?
What do you mean?
They're saying it's not whiskey. Fireball whiskey is not actually whiskey.
No.
Isn't that what they're saying?
No. There's two. I read it that way.
So they
well.
make Fireball whiskey, which is, but then they also
they have a knockoff version
gas
of
stations.
themselves.
They sell something called Fireball Cinnamon that is not.
Gotcha.
And it's because the gas station doesn't have the appropriate license to be able to sell them.
Okay.
So if you get the little bottles at the little nips at if you get them at a liquor store,
ones you throw in your golf bag,
you are getting actual Fireball whiskey.
Okay.
If you're buying them at a convenience store, you're most likely not.
Yeah, it's the same label though, so
it's really it's almost identical. And
did they just take off the whiskey piece?
It's very, very close.
Okay.
So the plaintiff, who's her name's Anna Marquez in Chicago, says in the lawsuit that I'm going to quote here, she bought Fireball Cinnamon unaware that it was a different product from the whiskey that she expected. I generally think that most consumer lawsuits for consumer products, like the You remember the Subway tuna one? Like, is there really tuna in this Subway sandwich?
How can you forget? Yeah.
Most of them are generally kind of scammy. This one feels legit to me, actually.
But you haven't listed her asking price yet.
$5 million.
Yeah.
Seems fair.
All in Fireball whiskey.
Yeah. Honestly, it seems fair.
Reasonable.
Yeah.
That's a reasonable demand. Sure.
You know, I mean, again, maybe a more reasonable demand would be, hey, I'd like, lifetime supply of Fireball whiskey, because obviously she's a big fan of it. So
Clearly.
Yeah, like Kramer with the lattes and the coffee and everything like that.
Exactly. So I just look at this, and I think there's actually a case here, in my opinion, in my untrained legal opinion. Legal mind's opinion, whatever. It's there's something there, in my opinion, but is it $5 million worth? Probably not.
I wonder what the taste difference is like, because I don't think I've ever run into what we're talking about here. I've certainly had regular Fireball, but I've not had the knockoff version.
Yeah, I don't know if I want to try the knockoff version.
I probably have, and I didn't even realize it.
Oh, boy.
It's a possibility.
Because, somebody brings some nips to a golf course and they throw you one.
Right. You think it's Fireball. Especially it appears on quick glance that you wouldn't be able to tell the difference unless you were really doing some detailed reading.
I don't ask questions. I just put it down.
Absolutely.
Let's take a quick break. When we come back, we're going to be joined by Paul LaMonica from CNN Business.
Miss any of the show? You can catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network. The United States Virgin Islands are St. Croix, St. Thomas, and St. John, and they are the perfect place for your next vacation. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands. Because with perfect weather and year-round temperatures of 75 degrees, relaxation is at its finest. Enjoy their spectacular beaches, world-famous cuisine, golf, tennis, and a wide variety of water sports. The U.S. Virgin Islands is one of the most popular vacation spots in the Caribbean. So head to visitusvi.com and explore their wide variety of travel packages today. There's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com for more information and to book your trip today. Come to America's Caribbean paradise. Visit usvi.com. That's visitusvi.com.
If you're thinking of becoming a snowbird, you'll need to put together a strong financial plan to make it happen. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you are getting ready to retire or already there, it's important to take a closer look at your current income sources and expenses if you're trying to determine whether there's room in your budget to snowbird and remain as financially comfortable as possible. Even while you're snowbirding, you can't forget your permanent home, because your overall costs can add up and you might find yourself in a difficult position when it comes to your expenses. If you'd like a copy of our brand new guide called Can You Afford to Snowbird, you can call us right now at 800-393-4001. Again, the name of the guide is Can You Afford to Snowbird, and it's available at 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. An extended nursing home stay could deplete your savings in months if you're not prepared. According to Genworth, New England residents could see yearly costs of more than $200,000 by 2030. So if you haven't done your planning yet, now is the time to call Cushing & Dolan. They're experts in estate planning and asset protection, which is critical if you want to enjoy your retirement years. Get their new free guide called Long-Term Care Planning for Procrastinators. Learn about the steps you need to take to protect yourself, your family, and your assets from these high costs. If you or a loved one might need a nursing home, don't delay. Call Cushing & Dolan today at 866-848-5699 and ask for their new guide, Long-Term Care Planning for Procrastinators. That's 866-848-5699. Or you can request the guide online by visiting legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and our Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Veterans benefits just got a whole lot better. Whether you're about to leave the service or you've been out for decades, the PACT Act gives eligibility for VA benefits to thousands of veterans. The PACT Act is a new law that expands benefits for veterans exposed to burn pits, Agent Orange, and other toxic substances. To learn more, visit va.gov/PACT or call 1-800-MY-VA-411. If you or a loved one served this country, it's time to get the benefits you deserve.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The latest news on inflation and how the markets are reacting every morning, right here on the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
The Financial Exchange is proudly partnered with VA New England. If you or a loved one serve this country, get the health benefits you earned and deserve. Call 844-VA-CARES. That's 844-VA-CARES.
As promised, we're joined by Paul LaMonica from CNN Business, and we're talking a little bit about Chevron today. Paul, how you doing?
I'm good. How are you?
We're doing well here, and Chevron is doing well. The stock isn't doing great today, but overall last year they had just a monster year with $35.5 billion in profit. What else did they announce during their earnings release and around that release?
Yeah. What's interesting is that oil prices have obviously, they've been volatile, but they were up last year, and that led to that huge annual record profit for the company. But what is going on behind that that's raising some controversy is that Chevron also recently announced a huge $75 billion share buyback plan and an increased dividend. And that's something that's good news for investors in the stock, because obviously a higher dividend means more cash coming to you, and the stock buyback, in theory, should increase earnings per share because it reduces the share count. But it's raising a lot of controversy in Washington. An assistant press secretary at the White House tweeted that this is an odd way to show if the company is, quote unquote, working hard to increase oil production. I think the White House and many other politicians would rather see Chevron, if not, increase pay for workers, at least pump more money into more production so that oil prices and gas prices can come down.
So if I'm running Chevron, I think back to 2013, 2014, where I did decide to increase production significantly. And then I got hit by a buzzsaw when OPEC, and really OPEC Plus led by Russia, decided to pump a whole lot more oil themselves and torpedoed oil prices, and I lost a bunch of money, and it was basically a lost decade for me as a company. Why would I want to subject myself to that again without any assistance if things go belly up?
No, it's a great point, and this is what I think makes it a difficult bit of a conundrum. Should a company like Chevron be really punished for rewarding investors when times are good? Maybe not. But I think the bigger issue, as you point out, is that when this is a very volatile cyclical business, and there are going to be downtimes and upswings. The calls for windfall profit taxes obviously only happen when there are windfall profits. You don't see many people in Washington saying that we should bail out big oil companies. And obviously, I'm not suggesting that they need massive government assistance by any stretch of the imagination, but it does kind of need to cut both ways. If you're going to tax a company when times are good and complain about excessive profits, then you need to lend support when things are bad. Again, all that being said, sympathy for Chevron when you consider that they are making this huge annual profit and that they're deciding that a stock buyback and dividend increase makes more sense than aggressively ramping up production even more. I mean, they did spend more than 40% higher on cap spending and exploration in 2022. But, you could argue that when you're flush right now, spend even more. It's a great investment in the future.
With a divided government in place right now in the United States, it would seem unlikely to me that any kind of windfall tax provision on energy companies would go into effect. Do you feel similarly at this point?
Yeah, I mean, not sure, though. I think that one thing that does seem interesting is that there does seem to be a bit of bipartisan support on both sides, the aisle for, for people in Washington to try and go after an easy target, which are big corporations. So that could be energy companies like Chevron. It could be big tech firms like we're seeing with the, potential antitrust actions taken against Google or Alphabet. It does seem like it's an easy political win if you're a Democrat or a Republican to beat up on a quote-unquote big, bad, giant of industry in America. And, some of it is fair, I think, but some of it's misplaced. We obviously have a culture where we want to celebrate success, but don't get too successful because then, you need to be reined in.
Very good. Paul, appreciate the time today. Thank you so much, and have a great weekend.
Same to you. It would have been better if the Giants were playing, but alas.
Yeah, I know. That was a tough one last weekend for you, but what are you going to do?
Go Niners.
Exactly. That is Paul LaMonica from CNN Business talking about Chevron. I want to talk about Chipotle, more commonly known as Chipotle. They're going to be hiring 15,000 people ahead of burrito season. Apparently, they have their heaviest business between March and May. Why?
Yeah, that's strange.
They cited weather and daylight, but I think the college aspect.
There's weather and daylight all around the.
There's weather every day.
Today has weather and daylight.
Mm-hmm.
I think the college aspect of things would contribute most to this.
What, you're on spring break, you go and get a burrito?
No, there's a lot of Chipotles by college campuses. March to May is when.
What about September? Why is September not big? What about October?
Why, Paul? Why?
I'm not a Chipotle.
Tell me why.
Is Columbus Day too big of a holiday?
I'm not a Chipotle executive. I'm just theorizing. I'm just a guy.
That's your
up here
homework
with the
for
mic.
this weekend.
Yes, Paul. On Monday, you will prepare a 3-page written report on why burrito season runs from March to May. 1 page for each month.
Front and back.
Chat GPT.
Single-spaced. Single-spaced. No Chat GPT allowed.
Oh, good luck catching me.
We'll see y'all back here on Monday. Have a great weekend. Enjoy the run-up to burrito season.
If you buy a new property, could you continue to maintain the costs of your current residence in order to become a snowbird? There may be some tax benefits to staying a bit longer in each year.